Just went on Tuesday, November 19, 2013. One of the headlines you'll probably read tonight about the market is that the S&P 500 index, and we're looking at a daily chart now of it, closed with back-to-back losses for the first time in the month of November, and here we are already pretty much screaming towards late November. We have Thanksgiving next week, but in and of itself, it's not so much the fact that we've been quite strong this month on this S&P chart, and we held the breakout from this multi-quarter rising channel move. You can see the light blue lines broke out from it, held the back test at 1746, and we figured or looked to be accelerating to the upside, especially late last week. It wasn't so much that setup. That was enough to keep us, for example, from becoming very aggressive on the short side with respect to the S&P 500 index. Individual issues may be another story, but that would have saved you at least, for example, again, buying puts right away on the S&P or the SPY or what have you, given this breakout and kind of consolidation and then hold of it, the channel and then the push higher. Remember, we can't consider this move right here, this whole thing, a bull trap in the same way this was a bear trap until we see price crack through below and probably close below 1746, those lows from a couple weeks ago. But it wasn't so much that. We wanted to look at the construction of the market, the parts of the market. And what we saw was a market where breakout plays and momentum plays were just becoming not so much scarce, so to speak, but just that they were becoming a bit lethargic, that the air was coming out. And I think we started to see that really kind of come to a head with some of these names that have seen terrific runs. I mean, obviously, ONVO, the 3D printing kind of biotech play all in one. Terrific run up, but you could see, they say stocks take the stairs up and the elevator down. This one probably took the elevator up and maybe, an even faster elevator lower today. Now, it still had an incredible run, and it's still basically, you can see it's still above this level where it found some resistance over just this past July. So let's not get ahead of ourselves and say that this is like the kind of the Dutch tulip craze, and now ONVO is going to crash. Now, it could still come in some more, but the point is, if you bought up here and you lost your discipline and you chased this thing higher, obviously today was a very unpleasant experience for you, and that really is what we've been talking about in these videos. It's not so much the fact that because you're looking to be disciplined and cautious, that makes you kind of a perma bear. It's not that. It's just you want to, in any kind of market, practice good discipline. And the reason for that is because even when it seems like the market is going to reward people who stray from their discipline and kind of throw caution to the wind, eventually the tide always turns in the stock market. So we might be seeing that now. Again, I emphasize the word might. VJET, another one of these hot plays. Again, you can see very strong one past couple of days, past couple of weeks. I believe it was since with the IPO, but then, kind of the sharp give back there. And of course, Triple D. Look, not down nearly as much as ONVO or VJET today, but the monthly chart does have that kind of look to it that we saw at, prior parabolic moves higher. Timing the top of the parabolic move is a very, very tough game. If you do play and you short it, you got to have a firm, disciplined stop loss. So again, no discernible, I would say, damage, but clearly, and we noted this kind of candle yesterday, it could be a spinning top candle, that you just don't want to get caught up buying this thing up here and then just saying, well, it's a monster stock, it's a great story, and it is. But that's not much of a reprieve, again, if you bought up here in size and you're just holding, because what's to say it can't come down to the 20 or even the 50-day moving average? That would be perfectly normal within the context of a correction. I think you would agree with that, even within, again, the context of a bull market correction, of a super stock bull market correction. Let's go over to Tesla. It did bounce today. Here again, it does not. Tesla is not an easy short. It's still a super stock. It's just in correction mode. It's probably keeping the speculators honest. I was looking at this 115 area. It didn't quite get down there. 200-day moving average isn't too far below either. We'll see. Today's candle isn't kind of any discernible bottoming candlestick. We'll see if buyers can kind of support that 120 area. If not, look at 115 and the 200-day moving average there. But speaking about discipline, I mean, BlackBerry, we talked about this. BlackBerry, I wrote this post about BlackBerry last fall. Okay, I said if it could break above 850, especially with this nice buy volume in September, it could probably see a nice run. It did, but once it gave up the ghost and started to kind of give us this coming around the mountain look, you can see it bounce off 850 here. But the closer it got back down to it, the more you wanted to just kind of abandon that thesis and not get married. That's the discipline. You can see BlackBerry now is just slip sliding away. It's a no buy, I would say, below 850, unless you really do have conviction that this thing is not only not going out of business, but it's gonna have a renaissance. I mean, again, 850 was your kind of level to key off as far as BlackBerry is concerned there. And of course, some of the solars I had been, Solar City was a beautiful weekly chart breakout, and you can see it's actually still intact, this right here. But you never want to assume that a certain stock is a bullish consolidation or a certain level is an automatic buy in terms of being a support level. There are only potential bull consolidations, potential support levels. And I wish you could say with more of a guarantee, more degree of certainty, but that's not really how the market works, I think, over time. And you can see Solar City is starting to get a little sloppy consolidation. It's tough to really call that a bull flag at this point, given the many loose and sloppy patterns. We'll see if this 50-day moving average can hold, but obviously a lot of the solars got hit today. YGE, you can see that was again a lot of selling there. Let's look at the ETF. You can see the TAN ETF. Just a little concerned here that we could be dealing with a breakdown from this kind of rising wedge within the context of an uptrend, and then if it breaks lower, that pattern tends to be an aggressive move lower when they do resolve. So again, with a lot of these high momentum names, you just have to show a little bit of patience and discipline. But then again, and this goes to the post I wrote at the end of the day here. Names like Netflix, Amazon. It's hard to say that we're in some kind of bear feast here. It's only certain hot momentum stocks that are getting hit, because Amazon, Netflix, they're really not getting worked. I mean, look at the lack of sell volume on Amazon. I mean, bears are going to have to do better on that. Let me check in on Priceline here. Not too much sell volume to speak of. So that's what I mean. It's not like everything's getting hit and this market is an easy short. It's not, but that doesn't mean that, it's been a great, past couple days for bulls either. We're in this kind of grinding mode. That's pretty much how I'm viewing the tape here. Now, on a more positive note, some stocks to watch. I mean, I mentioned Shutterstock is working on a nice long base. Let's see if it gets going above 74, especially 75. That would be your initial trigger there. LifeLock continues to kind of just consolidate base over base over base. Keep that one in your watch list. BLMN, owner of Outback. I did not like that fade above 26. But overall, the weekly chart's still consolidating pretty well there. And CSTE, another nice weekly chart consolidation. So just keep that in your watch list for tomorrow. And let's see what the market gives us.